What's going on, family? It's your girl, Currency Coach, and this is your top-down analysis for today, June 28th through Friday, July 3rd. So, this is the channel we talk all things currency. And when I say currency, I don't mean just your capital. I'm not talking about money alone. I'm talking about energy. I'm talking about how you showing up physically, mentally, spiritually, emotionally, and economically, not only for others, but more importantly for yourself. How are you showing up in the world for you, right? Currency is energy in the sense that it has to be in motion. So one of the reasons why I started this channel is because I wanted to, along with everything else that we're going to talk about, I wanted to shed light or give my own perspective on how I personally trade gold. Gold is a highly volatile pair. It can change on the drop of a dime. It's highly influenced by geopolitical events, economic reports, uh price action, structure, all of that different stuff. And I don't use a particular strategy, so to speak. I strictly use structure, price action, and just understanding the full gamut of technicals versus fundamentals versus also the different correlators that you can use with gold to tell a story. Okay. So in this video, this is exactly what we're going to do. If you're new to this channel, you find value, go ahead, hit that like button, subscribe, comment below. Once you finish watching the video, what is it that you would like to see? If you're new to gold, I want to know. If you're new to the charts, you're new to the market, the currency market, the futures market, whatever you're personally looking at, drop that below. What is it that you are looking to gain strength in? What are you currently struggling with? Let's talk about it. Let's get that handled, uh, all on this channel. All right. All right, y'all. So let's get into it. Top down analysis. First things first, before I even get into the chart, y'all can already see I've already got my stuff marked up. My highs, lows, equilibrium areas, and the levels that I'm currently looking at. But before we get into this, let's get into what we can expect from an economic standpoint for the week. Now, Forex Factory is the economic calendar that I typically will reference every single week before I jump into the charts. Before I do my top down analysis, I'm always looking at the Forex Factory, and I'm also looking at other geopolitical news, primarily because we are at war, right? Or we're involved in the conflict, all right? Iran US conflict. So I'm switching between those two dynamics because, again, all of that does have an effect on price action for the US dollar, which really affects gold's price action, how the directional and the structure of gold. Okay. So looking for red folders for USD primarily. All right. So Sunday, no red folders. That's today. Monday, pretty clear. Tuesday, no USD red folders. We do have JOLTS job openings and consumer confidence. And as you can see, these are orange folders, meaning that they're going to have a medium level of impact that is expected. I will say with this JOLTS job openings, this should be fairly, this should bring a lot of volume within the market. The reason why is because this is a measure of how many, again, job openings. I mean, it's in the title. How the economy is currently progressing. Okay, because the more jobs that are available, the more people that are basically spending money, throughout the economy, the stronger the dollar. That goes directly into like the unemployment rates and the unemployment data or economic data that you'll see later on in the week. So this is, even though it's orange medium impact, this is going to bring a good amount of volume, I believe, within the market based on the numbers. So right now the forecast for the JOLTS job is 7.28 million, right? 7.2. So a large or a higher than forecast or anticipated number here. Let's just say this number jumped from 7.2 to, what previous was 7.6. So let's just say it jumped to like 7.7 or 7.8 or 8.0, whatever. That would be a very strong actual number that would therefore strengthen the US dollar even more. Right now, the DXY is bullish, but I believe that would strengthen the dollar even more and put more pressure on gold. So gold would remain bearish. My bias for gold right now is bearish. We're going to get into that in a second, but that's just a little breakdown on how to read those reports. You can also, if you've never opened this up, you can open up that folder and get more detail here. Okay, actual greater than the forecast, good for currency. When they say currency, they're talking about the US dollar always. Okay. Now, moving on from there, Wednesday, we've got some more USD red folders. We've got Fed Chair Force is speaking along with the PMI manufacturing prices reports, and I believe there was one other red folder, but definitely got some more red folders coming on Wednesday and Thursday. Thursday is going to be interesting because we've got NFP on Thursday instead of Friday of this week, because again, Friday is a bank holiday in observance of July 4th. That's Saturday. So it's always the bank holidays are always going to fall on that next business day. So Thursday, we're going to see a lot more economic reporting. We're going to see a lot more volume, a lot more volatility that will give us more liquidity in the market. So Wednesday and Thursday, I'm anticipating a lot of moves in the market because of these reports. And again, a more for your unemployment, let's just say for your unemployment rate and claims, you want that forecast typically to be lower, or rather you want the actual, to be lower than what's forecast for your unemployment rate and claims. Why? Because the less individuals, the less people filing unemployment, or that's, filing unemployment or on the books, the more money that's being circulated throughout the economy, because people have jobs, people have the money to go out and spend freely, and they have that, disposable income, etc. So for a strong US dollar, depending on what you're trading, what pair you're looking at, right? For a strong US dollar, meaning a weak, bearish side for gold, you would want these actual numbers to be lower than what you have. Okay. So 220, you want to see a lower number here for a strong dollar. 4.3%. It's been basically flat this whole, for the last 2 months, but you would want this to be relatively the same or lower, right? Because the unemployment rate, you want to see low numbers for unemployment. Okay, so those are the numbers I'm looking at. Also, the non-farm, of course, greater than forecast is good for currency. So we had a strong dollar back in June. Yeah, on June 5th, you can see all green, green, green. Only red was in March. So all in all, I'm anticipating, one of the questions that I'm always asking myself at the beginning of the week, what can I expect from an economic standpoint? I am anticipating a continuation of a stronger dollar this week, which would mean further sales on gold, which is absolutely fine with me. Okay, so there's your economic reports for the week. And if you guys want to see more of a breakdown in fundamentals, if you're struggling in that area, drop it in the comments. Let me know. Let's really get into this. Okay, let's really get you at a awesome place going into this last 6 months of the year. Now, from a global or geopolitical standpoint, we've got the Iran war. We've already talked about it. So before we left, or the markets closed on Friday, gold saw a quick spike up to round about that 40.90 area. This is because there was the last minute talks of negotiations, possible, peace agreement, etc., etc. One thing about the market, and specifically gold is highly emotional. Okay, so gold will always react to what could be versus what actually is. Okay, and remember, from an institutional standpoint, though that those numbers, that reaction is already priced in. Okay, so from a retail traders, we are typically surprised or the last to know, but from an institutional standpoint, they already know what's going on. They already have that those numbers priced in, are locked in. So that it's not as it's not a surprise, with the powers that be, of course, the central banks, etc., because they know when. This is how they know when to place their orders and when to sell, right? When to buy and when to sell. So from a geopolitical standpoint, close, we're talking about the negotiations, et cetera, for Friday, but I was still bearish because, again, I know that the market is quick to react very emotionally to what could be, right? Not what actually is. So we saw that quick spike, but then almost immediately over the weekend, we came right back to US just struck another, we had another trade attack in Iran. The tanker struck Strait of Hormuz. So still no peace agreement. No, it's just a continuous escalation, just continuous chaos, whatever. All of this is going on. So and as of 2 hours ago, Iran and U.S. agreed to halt attacks and to renew the talks. Again, more to come on that. I'm honestly still bearish especially from this standpoint, until I see an actual agreement, until price action structure gives me any kind of indication, and even from an economic standpoint, because we'll see the change in the economics as well. Like, we'll get little hints here and there, but until I see something from that standpoint, my bias is bearish for now, fundamentally. Okay. Now let's look at what happened last week. We'll get into, we're going to go from Sunday to what happened at the close of Friday, and then we're going to get into some of these correlators. I'm not going to touch all of these, but I'll touch on a few. Okay. All right. So what did we see last week? Let's bring it to one of the lower time frames. All right. So last week I gave an entry around 4,200. The reason I actually gave the zone 4,200 to 4,220 to 4,200. The reason I was looking at these areas is because, actually, let me get back. Here we go. This is where we are. Okay. So the reason I gave these areas 4,200 right around here to 4,220 is because I saw that, number one, at 4,220, this is where we had a continuous support turn into resistance, and where price action had continuously held this major area over and over again. So we had a tapping of this zone quite a few times. So I was looking for her to come up and retest this area, because on the 19th, which was the Friday that we closed right around in here. So I was looking at her to come to this area once again before dropping. We didn't quite hit this 4220. We hit right around 42, let's just say 1815 or so. And then we had a second re-entry around 4205 to 4200. My 15-minute trend line, I love drawing my trend lines, y'all. It just gives me a better direction in price. The better, just giving me a kind of a roadmap for price. Okay, so my 15-minute trend line, this was on my like I said, lower time frame. And I said, if we break that and retest, then we're likely going to continue further down. So my sell, I was bearish, from a major and minor structure standpoint. Number one, because again, we were bearish from economic and also from a global geopolitical standpoint with the war, etc. From a technical standpoint, I knew that we had not quite finished this full sell, right? So hit this area 4220, 4200, continued further down. My targets were coming back in to fill these two imbalances from June. I think this was June the 11th. Yeah, we had a nice bullish engulfing bullish order block right in here. Bullish engulfing candle took us right above that first resistance level again, 4170. This was the resistance level I mapped out last week. So that was my first target after 4220. So for those that are again new to the channel, are not part of the community of my currency community, I give both intraday and swing trades should the opportunity present itself. Okay, because every week is not going to be a swing week. Some weeks it's just going to be intraday, especially with gold. So some weeks we just strictly on intraday plays. Some weeks we're looking at the longer plays like the swing trade potentials. So it just really depends on price action. I'm always saying follow the money. Follow what you see, not what you think. Trade what you see, not what you think. Okay. Anybody that trades gold knows we can change directions by the drop of a dime. So looking at it at this from a bearish standpoint, my first target was 4170. That was the resistance area again. Just like 4220, we were continuously getting resistance. Even looking left, this was a major area where we continued to get moves or big reactions right around this zone where price broke from support to resistance, back to support, 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 again, several touches, resistance, support, support, and then again, resistance. So I let everyone know once we break that 4170 zone, it is going to be a free fall, y'all. We should, that is a key level. That is a key level, right? Not so much in terms of like supply and demand, but it is a key level because this is an area where, again, there were a lot of institutional orders that price was just drawn to this area, and major moves were happening within that level. So once we broke it, I knew that we were going to continue further down. So that was that first target that I gave. This was a quick target I gave actually in our currency community money market lab Telegram chat. After that, after we broke that 4170, then I was looking at these areas. I was looking at these areas for her to retest this weekly daily low, this blue line. This is the low of the previous week, and hitting that fair value gap. So I had this as at first quick play. Then this is another major target one, which was 4140. The second major target was right around here. I think this was 4070 or 4080. Yeah, or actually this was target 3. So this target 3 was 4070. Target 2 was target 1. This was target 2 was the weekly daily low, because I knew we were going to retest this area, and then further break would have her drive down back into those two fair value gaps left over from the imbalances on June 11th. All right, so we ended up hitting all of our targets, as y'all can see. Target 1, 2, 3. We hit the third target. This is my fourth intraday target right at 40.40. And then my major swing target was right in here at 4,000. And this 4,000 level is a psychological level. Those that are in my community know that I was saying that a break above or below 4,000, that's going to really tell us whether we are going to continue. If we're continue on I'd say a pullback, or you could say a pull up, but a pullback, driving back into, one of these supply or resistance areas to go further down, or if we just break further, come back to respect or retest this zone for resistance, or have this be now and turn into a new supply area to continue down. So we did hit this 4,000. She kind of played around this little level here, and then we saw a quick spike up to 40.90 at Friday. Okay, and now we are kind of ranging. We're still bearish, but kind of ranging. We opened bearish, and we're ranging right in between that 40.90 to 40.50 area now. All right, so congratulations. For those that are a part of the community, like I said, we did cover a good 2,200 pips from 42.20. So that was absolutely amazing. Now, one sidebar, one of the great things to being in the currency community, we, along with trade ideas, we also give breakdowns, right? You can ask questions. This is not a buy here, sell here community. This is for individuals who actually want to learn, who want to be self-sufficient, who want to learn how gold moves and how to place your own trades, how to trade independently. That is the goal in the currency community. We're not here to spoon feed or anything like that. We not a signal. This ain't no signal service group, nothing like that. We're here to empower your mind. We want to elevate your currency. Okay. So if you're looking for a community, if you're looking for something to that effect, then click the link. It's in the description box. Click that link. We'll get you started. We'll get you onboarded. Let's get it. All right. So looking at the gold correlators. Now, what in terms of price, and what in terms of different assets, what really moves gold? Well, of course, we've got the DXY, we've got the bonds, we've got silver, UJ, and oil. Like I said, I'm not going to go through all of these. Only going to pick a few because we want to look at what we can expect for gold this week. Okay, so just breaking it down from a higher time frame standpoint for the dollar, right? Dollar was on a decline for a while, and then very recently, right, she has been coming back up. She's been slowly strengthening her position, using this area. Like, this is our resistance or compression, liquidity compression area. This is where she's starting to expand here. Okay, we've hit this area of support over and over and over again, more than 3 or 4 times, and now we've got you can clearly see where we have broken that downtrend once again. We were trading pretty much sideways for quite a bit, hit the peak, came down, and now we're starting to come back up. So as of late, we've been printing higher lows, higher highs, higher lows, higher highs. Everybody that understands price action and market structure, if you're printing a higher level, she's got to give you a higher high. If she's giving you a higher high, she's eventually going to give you a higher low. So the way that the economic reporting and everything is looking now, I'm looking at gold, or rather not gold. I'm looking at the DXY USD continuing further up, right? And if this NFP that's going to come out Thursday, if NFP comes out strong, I'm looking at a bullish dollar. I'll be looking at a bullish dollar. If we're looking at a bullish dollar, I can expect her hitting anywhere this between this 103 to 105 area. I'm looking at her trading within this area or hitting this area at the highest. I'm looking at possibly 105 or so, right around in here. Okay. If the NFP is weak, then you will see a bearish dollar, meaning the dollar is going to weaken, and we could see her driving back into these lower areas, possibly retesting this area of support. Okay. So that's just a quick look on that. Like I said, I'm not going to spend too much time on it. UJ is another like a currency pair that I use just as a correlator. Why? Because the because it is a USD major pair, it's going to fall in line with the DXY. And as you can see on the higher time frame, UJ has been on a bullish run. Clearly, you can see she's been going up. Okay, higher time frame. So I do anticipate further upside, but I do believe that we will, with healthy price action, we will get corrections or pullbacks. I do believe we're going to get more of a correction from this standpoint. I've got my my high of last week, my low of last week, and then my mid range. Y'all can clearly see that price is trading above the mid range, so we're closer to a more of a resistance, closer to what I would say more of a supply area here than anything, than this lower demand area. So I'm watching to see how she continues to react here. I'm expecting like I said, a pullback, or say a pullback, a retrace correction, first to I would say first to this mid range, and then breaking below that would be retesting this weekly low, the low of last week, and then further than that, this is where I'm really looking. This is where I would definitely get in for a buy. And again, I don't trade, but this, if the opportunity presents itself, I'll throw a standard on that thing. This is where I would very much entertain a buy opportunity, anywhere from 164, let's just say 164.80 to 500, primarily 16500. I'm really interested in this area because, again, we had a lot of strong moves from a 4-hour standpoint here, and then if you look all the way left, right back in April, this is another area where she came. This is the highest that she had gotten in April, and she immediately rejected, right? So I'd be very interested to see how she is reacting at this area and to take her to go higher. Okay. Current trajectory, we are bullish from a major and minor structural standpoint. So I would be interested in taking her higher at this level. This level looks really good too. If I did take trade here, I just have to say, but this level, if you're looking for a buy opportunity, not from the high, but from a lower area, I would be looking for her to retest this zone. Okay. So that's UJ. And then another correlator, of course, is oil. But I'm not going to get into, like I said, I'm not going to get into all of them. I just wanted to show you just one or two. If y'all want to see more of like the correlations between gold and like the bonds market, oil, silver, etc. Drop it in the comments and let me know. We'll do some additional videos on that. All right, so what can we expect for gold for this week? Okay, so I've already dropped my top-down analysis for my group. Let's really get into what we're looking at from a higher time frame standpoint, and then we'll come all the way down. So I've been following gold. This has been my monthly trend line, just at the different areas where she has had major, I'd say major breaks in structure here. We got here, and then where we are currently here. Okay, so she's been all the while just kind of following this same area and respecting this same area all the way to the top. We very recently broke that area, like I'm gonna say the latter half of last week, Thursday or Friday or so. And like I said, now we're just kind of ranging in between New York, Friday's high and low. All right, now the areas that I am looking at, we have several areas of imbalance and inefficiencies from a lower standpoint. So we've got some inefficiencies here right around the 3,800, or inefficiencies right around like 36 to 35. In addition, again, price has been following this same path here, where price action has hit this support zone, and then from the top area we have liquidity compression or resistance following in here. So from a major structure standpoint, I am definitely bearish. Minor structure, I'm bearish as well. Minor structure, my mid range is right at 40.90, and as you can see, we opened right below that, a little bit below that. We opened bearish, so we are trading below that mid range. So currently, we're still again bearish. Okay. Now, for us to be trending bullish, right, back on a bullish trend, I would need to see her break this zone from 4380 to 4400. Why? Because this is the last area we had significant equal high here, right, where her price tried to push up a little bit further. She came back down into traded below into that demand zone once again, came up, respected, tried to push again. We finally came back up, and then she just melted right at this 5,300 area. So I would need to see a break above 4,380 to 4,400 for me to even consider, gold trending once again towards 5,000 and up. I do believe that we're definitely going to go higher if we break lower. So I'm ready for that sale. Gold is selling, but she is going on sale. She's definitely, once we hit down here, that's going to be a beautiful buy back to the top. I'm just staying patient for those buys, for that swing. So we've got bearish on a major and minor structure standpoint. This is the area I'm looking at for us to be trending upward. As y'all can see, again, pretty much lines up with my equal high. We've got major rejection here, we've got here, and then this is another area where again support became resistance, or that key level of support became another key level of supply. So the zones that I'm looking at, let's see, let's stretch it out. Okay, so the zones I'm looking at already, this is the immediate or the weekly areas where a price has been trading within. This is our high of last week, 42.20, 22, and the low is 39, right around 39.60 or so. So this was the full range of price action. Now, coming further down, let's look at the 1 hour. Okay. Further down, now this here is is the immediate, you could say, support and resistance or range of price from New York. This was Friday at close. Okay, so this is the highest that she got. This is the lowest, but this is our immediate range here. All right. So I'm gonna talk about the buy up first. Okay. Now remember, my bias is to the sales for now. Why this? Because that's what price action is telling me, and has been telling me for the moment. I'm trying to grab my fib, so here we go. Okay, but if I'm looking for a better entry or a higher entry for, you could say, for a sell, may not happen today, may not happen Monday, but I this is what I'm personally looking for. So first, you know, I'm looking at, again, I use this area, this particular area, or this particular area for my fibs, because I'm looking at the last swing high that price printed. So this was the last swing high, this here. Okay. So I did my fibs from the low point. Let me stretch it out a little bit further, because this is actually where it started. So from a low to the high, okay? So if I'm looking for a possible, a quick like intraday buy, quick little pop up, then I would want to look at my 50% level, I would say my 38, my 50, and my 61. My 61 is really my golden level, but anybody that knows how price action works, etc., knows that typically she will give 30 to 50% of whatever move that was made, whatever swing high or swing low move that was made previously. So 38 would be right at 40.53. You can see that she did bounce in this area, came back up, wasn't able to sustain it. So we may be looking, dropping a little bit lower. So I'm looking at my 38. I would be looking at 50 and my 61. My 50% is right at 40.40. My 61 is at 40.27. So you could say 40.30. So 40.30 to 40.40. If I'm going to, use any of these levels for, or find support at any of these levels, these two would be the levels that I would be looking at, my 50 and my 61. We can hold support here. If we can hold at the 38, then that would be a good area, to possibly continue up. But the way that she's moving, I feel like she may have a little bit further downside possible, a little further downside possibility. Okay. So that's where I am with that. Now, how far would I take it? Or how, some potential targets. Well, first target is I'm always looking at my mid range to my last high of a session. Okay. Because those are just, to me, relatively easy, 50 pip or whatever targets. If you're looking to make a quick 50 pips or so, that's a easy, I'd say relatively easy target here. Either your mid-range at 40.90 or your New York high at right at like 4100. Higher than that, I'd be looking at my resistance levels. My first resistance level is going to be 4120 to 4140. Now, this is an area that I'm also looking at for a sell. Okay, I'm also looking at this area for a sell. Why? Because this is the last area where we had a nice fall. Okay, a nice fall from these higher zones, 41, 40, 70, and 42.20. So I'd be looking at this area for resistance for a potential sell. The second resistance area, should we, hold this, come back, maybe retest or whatever for support, continue up, would be 41.70. This is again the same area that we looked at last week. She's still in play. It is a chance or a possibility that we come up to this area, and then beyond that, a retesting of last week's high at 42.20. So these would be my immediate buy zones. Mid-range target, this mid-range 4090 to 4100. You can decide. I let individuals decide their own targets, based on your trading plan. Everybody should have a trading plan, but based on your own goals and trading plan, 4090 to 4100, and then the second target 4120 to 40. Third, should we hold here, 4170, and longer than that would be this resistance. Now, if we come above this resistance, then she's likely coming to retest this area, 4350 to 4350, I'd say, to that 4400 at the very highest. However, because we're primarily, again, bearish, I'm looking at these three areas for a continuation further down. Those will be my prime areas for a sell entry. Okay. Now the targets. What targets am I looking at for a sell? Let me get rid of this. Y'all got me buy. Now for the targets I'm looking at for a sell, number one would be, and you, again, everybody can make their own targets, but my first target would be that New York low, okay, of 4,000 to the weekly daily low, last week's low. That would be my first intraday target of 39.60. Okay, so anyway, so 4,000 to 39.60, that zone in itself, this is a good zone to target for TP, for your first TP1. Okay, second intraday will be right at 38.85. I'm very interested in 38.85 as a potential target, coming back on the higher time frame so we can see it. Very interested in 38.85. Why? Because this again is an area, let's look at the weekly. Okay, this again is an area where we've had major moves from a higher time frame standpoint, where again resistance has turned into support, and we've got major rejection from the lows. So this is another, and we're at the bottom of this major demand zone. So 38.80, 85, that would be my second intraday target. And then for swings, I'm looking at 38.20 and 35.18. Now, why 38.20? Why 35.15? Because this candle, these candles here where you see the yellow boxes, these are areas of price inefficiencies or fair value gap. These fair value gaps gave displacement, meaning price moved so fast between the first and the third candle, it was unable to keep up with it, keep up with the momentum. You see that here. And this is the first, second, third. That second candle is always going to give you that higher momentum or that displacement between the first and the third. Okay. So these are the candles that I'm looking at. And when I grab my Fibonacci, right, if I start from, let's just say, the bottom of that candle to the top, my 50% lies right at 518. think it says 35.16 or something like that. But we're right at that. Let me bring it out just a bit. Right. Yep. Right at that 35.18 is 50% of that full candle. So that is 50% of that candle. So right around 35.18, 35.20, anywhere in there would be my target, but I'm basically targeting 50% of those displacement candles. I also like this area should we continue further down and pick up this inefficiency. Let's just say this week. I really like this area too because y'all can see this is also right in line with the last major breaking structure to the upside that we had at 3,500. So again, these are just levels that I'm paying attention to. Would love to see us hitting those inefficiencies or filling up those imbalances. Remember, the market hates imbalances. The market hates inefficiencies. So sooner or later, they're going to come back and those gaps. This was done back in September, and we have not been back to fill those inefficiencies. So again, I would not be surprised if we hit at least this area this week. We may or may not hit this area this week. We'll just have to see what those economic reports are talking about. But like I said, overall, my bias is bearish. Watching price action to see if we have any type of change in direction, like from a structural standpoint. But until then, y'all got my targets. Y'all got the levels and the key zones that I'm looking at while I'm looking at those. So like I said, drop in the comments if you want to see anything further, if you'd like to see more on fundamentals. If you're new to gold, why you're interested in gold, what really interests you, and what you would like to see, or what you're learning, and what level of trading are you at, novice, intermediate, or advanced. And I will see you guys at the beaches and the banks.